Hey guys, welcome back tonight. I hope you had a really great weekend and I hope you're all safe from that awful storm. I want to see everyone in the comments let me know that you're safe, and if not, I'm setting out a search party. And last week, not only was I getting ready for the storm, but I also lost my internet before the storm. So I am still going to go over last week's price action. There's a lot that we can visually see. But outside of Monday, I really don't know what happened economic data wise or anything like that. So we're just going over technicals today. If anyone wants to fill me in on any details from last week that I missed, otherwise, I'm sure that the gaps will get filled in as we start the week. So this is SPY. We're on the 30-minute time frame, and last week we did open the week right here above the 35 EMA, and the main thing to note is that the 35 EMA was the support for the entire week. So Monday we opened right at the mouth of that bear gap, and then from there we started chipping into it. We filled it by Tuesday. Then Wednesday we closed right at the 35 EMA. This is the last chart that I posted out on TradingView, and the next day we opened with a gap up. After closing this gap, we cleared the way for a gap up above all-time highs, and then from there we dropped back down to the 35 EMA. That level caught us, and this is where it really gets blurry for me. I really don't know what happened on Friday, but we did end up closing right at the 35 EMA. So Thursday we did make new all-time highs. That was the first day of the week that we made new all-time highs. Then we dropped to the 35 EMA and we closed at the 35 EMA. And week over week, we closed the previous Friday right here. And then where we closed last Friday was almost completely flat, up just a tiny bit. So on Friday, we did close down 0.15%. VIX closed up 10%. That is huge. And I don't know if we closed within the implied move, but realistically speaking, if we closed here on Thursday and closed here on Friday, we definitely closed within the implied move. So then SPX, same thing over here. We opened the week right here. We did not have a gap here like we did in SPY, so we did just stay close to the 35 EMA. This was Wednesday right here. Thursday we gapped up above previous all-time highs, made new all-time highs, came back into the implied move, which was at 57.60. So we opened just outside of the implied move, got pulled back in, and we did close within the implied move. And then Friday we opened up and then got pulled back down pretty soon after we started trading, and we did close right at the 35 EMA. Week over week in SPX, since we did have that little gap variance, we did have a little bit of a bigger up week than we did in SPY, and SPX did close down 0.13%. VIX again up 10.35%. Interesting to see what that's all about. And on Friday we did close within the implied move. All right, and then QQQ, we did open the week right here. First 3 days, Monday, Tuesday, Wednesday, we stayed really close to that 35 EMA. This was the last chart that I posted on TradingView, and we did open that next day, which was last Thursday, with a huge gap up into this bear gap. The only way to really conquer a bear gap this size is to completely gap over it, but we gapped right into the middle of it, and then we dropped right back down to the 35 EMA, but we did stay right there at that 35 EMA level to close out the week. So Thursday we did close within the implied move. Friday we also closed within the implied move. So 35 EMA still very much in play here as a possible support. There was definitely some weakness on Friday, but we basically closed right at that level. So QQQ down 0.56% on Friday, VXN up 3.89%, and we did stay within the implied move here. And IWM, before we move over to IWM, QQQ did also have an up week. We did open the week right here, and we closed the week right here. So up week for QQQ. IWM, I believe, was the only one that had the down week. We started here, ended here. So yeah, IWM small caps did have a red week last week. We opened Monday right here and then started filling the FOMC rate cut gap. So 35 EMA at the beginning of the week was resistance while we filled that gap. Right here around 219 was that gap fill, and initially it was support until we got back to that 35 EMA. We got pushed back down, filled the gap underneath that. That was the other FOMC. We had two FOMC gaps in IWMC. What did I just call that? IWM. IWM had two gaps on FOMC week, one before FOMC and one after, and that second gap held as support. So we did bounce back up. Thursday, this was the last chart I had out on TradingView, and we did open with a gap all the way to the top of the implied move. And then from there, we did come back down to close within the implied move. And then Friday, we opened with a push up to where the implied move was from the previous day, and then pulled back. 35 EMA is right where we closed the week. And IWM did close up 0.68%. So up on the day on Friday, but down for the week. And we did close within the implied move. And then DIA had some really cool moves here. So at the beginning of the week, we opened right here, right at that 35 EMA. Wednesday, we did have a down day, but we caught support right on the FOMC rate cut gap that day. And then Thursday, we gapped back above the 35 EMA. And then Friday, we opened with a gap up and then made a push to make new all-time highs, and look at where we saw a pullback right at the top of the implied move for the week at 426. As soon as we hit the top of the implied move for the week, we pulled back down to the 35 EMA, and that was where we had previous all-time highs. So DIA up 0.32% on Friday, and we did close within the implied move for the week. And again, I didn't have the implied move on the day, but it would have been a close within the implied move for sure. All right, so that's not as detailed as I usually get, but hopefully we still see what happened last week. I know I feel at least partially caught up. Did we have GDP last week? Is that what I'm missing? Is that the big piece of the puzzle that I'm missing? Thursday, Friday, something definitely happened. I'll look into that, but definitely if you guys want to fill me in, that would be awesome. So that was a recap of last week. We've got a brand new trading week coming at us, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment if you have any questions. And if you want to support the growth of my channel, there are two easy ways you can help. The first way is financially, and that is by using the thank you button. And the other way, equally as helpful, is to share my channel with anyone that you think might benefit. Alright, so starting with SPY, and we are still on the 30-minute time frame. Tomorrow's implied move is between 567 and 576, and that is from options. The 30-day average volatility is $3 wider in each direction, 564 to 579, and the implied move on Tuesday's contract is 565 to 577. And the first level to look for to the upside is going to be all-time highs. There is a resistance just underneath that at 574, but really the target is going to be all-time highs. So 574.71 is where we made all-time highs last Thursday, and that is the first level to look for, and that is if we get above this 35 EMA and hold that level. We did actually close underneath that, so 35 EMA is actually going to be the first level, but if we get above that, then all-time highs. And then the top of the implied move is 576, 577 on Tuesday's contract. And then to the downside, if we don't hold that 35 EMA, look down to 567. That is the bottom of the implied move. 565 is the bottom of the implied move on Tuesday's contract. And we have the 30-minute 200 moving average coming in from underneath to catch us if we do drop tomorrow. We have the FOMC gap that we made after FOMC at the very bottom of the trading range tomorrow and just above that 30-minute 200 moving average. So the next support is going to be down near the bottom of the trading range for the next 2 days. And Stupid Willie is pointing us lower and showing lower highs. And then in SPX, the implied move for tomorrow is between 56.95 and 57.80, and that is from options. The 30-day average volatility is a little bit wider, 56.65 to 58.15, and the implied move on Tuesday's contract, 56.80 to 57.95. And to the upside, first level, again, that 35 EMA, we did close just underneath it. So keep a close eye on that level. It is going right through the middle. And then if we do get above that, all-time highs. So 57.67.37 is where we made all-time highs on last Thursday. So if we do get up to that level and you feel like that'll hold as a resistance, then we have the top of the implied move at 57.80. And I am always looking to sell spreads, but I do like a $10 wide spread. And because the next day's is $15 wider, I would probably look to 57.85 to sell. So 57.95 is the top of the implied move on Tuesday's contract. And then underneath us, the next level to look for is going to be the bottom of the implied move at 56.95. And then on Tuesday's contract, 56.80. And then somehow I missed the 30-minute 200 moving average. I do have it in the wrong place. So that is coming up from the bottom. And then we have that gap from after FOMC there as well. So that definitely could offer some support if we drop. So bottom of the trading range right here is where we are finding the next level of support. So really tomorrow we don't have a whole lot in the actual implied move. We have the 35 EMA, which is going right through the middle. Then we have all-time highs, and then we have this pivot support level right here just above the bottom of the implied move. So relatively an easy trading range. We just have to know where everything is. And here again, Stupid Willie is showing lower highs and pointing us lower at this time. So if I was looking for a spread to the downside, I would choose 56.90 and 56.80. And that would be on tomorrow's contract. And then taking it over to QQQ, the implied move over here for tomorrow is 482 to 492. That is from options. The 30-day average volatility, $4 wider in each direction, 477 to 496. And Tuesday's contract, 480 to 493. To the upside, the first level to look for, 35 EMA. Here we also did close underneath it, so it should definitely be treated as a possible resistance level. And let's just go ahead and put that in there as well, going right through the center of the implied move. And then if we do get above that, next level of resistance is just underneath the top of the implied move. That is at 491. 492 is the top of the implied move. And then Tuesday's contract takes us to 493. And that also does line up almost right exactly where we saw resistance, or really where we got kicked out of that bear gap. This is the last bear gap between where we are and all-time highs, so definitely expect a bit of a fight. It is outside of the implied move for the next 2 days, but within tomorrow's trading range. So if we do reclaim this 35 EMA and start to trend upwards, then just be aware of this bear gap up here. And then to the downside, this dashed line right here is a very interesting resistance that we had. I'm going to take it to the 1 hour time frame and show we have seen resistance right here for 2.5 months now. So this is mid-July, and then we saw resistance there in August, and then right here, and then we did get above that last week, but then we got rejected out of that bear gap, and we are just above that level. So that is 485. And then let me get back in here on the 30-minute. That is just underneath where we closed. And then if we can't hold that level or the 35 EMA, then look to 482. And we do have the 30-minute 200 moving average coming up. There's a pretty strong momentum on that, pointing up. So if we do find ourselves down there, I would expect a little bounce. With the angle on that moving average, I would definitely think that a short-term long play would be fun right there. And then 480 is the bottom of the implied move on Tuesday's contract. We do also have another support right here at 480. You could see it right here sitting right on top of that FOMC gap. And then underneath that, we have the 1 hour 200 moving average and 474, good old 474, just underneath our trading range. So I'm looking at this trading range and thinking it does look really fun, but this is definitely an intermediate, maybe advanced trading range. Just because it looks fun doesn't mean it looks easy. So definitely know where everything is on your chart here. And then switching it to IWM, the implied move over here is between 217 and 224. That is from options. And the 30-day average volatility, $1 wider in each direction from 216 to 225. And the implied move on Tuesday's contract is also 216 to 225. And to the upside, and really we closed right on top of the 35 EMA. So first level, just in general, to look for 35 EMA. For most of the week last week, it was pointing down and it was resistance, but we did see that pop up on Friday and then a drop back down to it. So 35 EMA right in the middle. If we do get above that, right here is where we saw resistance on Friday, 222. 224 is the top of the implied move, and 225 on Tuesday's contract. Underneath us, we have two bull gaps. So we have this up gap from last Friday and this up gap from last Thursday. That also lines up back here with the FOMC rate cut gap. That was this second one. And then this was the FOMC rate cut gap that we had before we actually got the rate cut. So in anticipation, we had this up gap. That turned out to be support last week. So that is right here lined up with that 30-minute 200 moving average. So if we do drop down, that would be an awesome place to go long. And if not right here, then definitely 217, 216 spreads look like a really fun play for tomorrow if we do drop. So again, not a really difficult trading range over here. Just know where everything is. With IWM, Stupid Willie is actually supporting the bulls. And then lastly, we have DIA, and this one is always just a little bit different because we only have weekly options here. So the implied move for the entire week is between 415 and 430. And over here, we are above the 35 EMA. This is the only one where we're above the 35 EMA. And IWM actually closed right on top of it, so that doesn't count. But SPY, SPX, and QQQ all closed underneath it. DIA closed above it. So the first level to look for is going to be 426.20. That is all-time highs. We did make those on Friday, and actually the entire week before that, we had this resistance level at 422.78, so let's call that 423, and that is where we closed. So this is a new pivot support right here, previous resistance, possible support. It's not support yet, we haven't bounced on it, but we do have that 35 EMA right here underneath, so we could bounce here, and if we do, this could be a new bottom of the channel. So that is at 423. Top of the 30-day average volatility is 428, and for the entire week, 430. That's the top of the implied move here. Underneath us, we have the FOMC rate cut gap. This was the day after FOMC rate cut, and we did come down into that gap a little bit, but then the next time we came back to it, this was last Wednesday, we dropped down to that same level where we found support, and that's where we bounced. So that is our next support, 418.45. 417 is the bottom of the implied move for tomorrow, and the 30-minute 200 moving average is coming up, just waiting to catch us if we do drop. And then underneath our trading range, we do have another gap from just before FOMC. So 2 bull gaps, and then the 1 hour 200 moving average is down here as well. So looks like a really fun start to the week. After almost an entire week of being completely disconnected from the market, I am totally ready to trade. So have fun tomorrow, trade safe, make sure you take profits when you're up,